Bismillahirrahmanirrahim. Assalamu alaikum and bahagia. A very good morning to you, ladies and gentlemen. And I welcome my fellow panelists in this first session of the Malaysian Banking and Finance Summit, Disruption in Banking Towards Banking 4.0. I'm privileged to be the moderator. Thank you very much for giving me the opportunity. I think at the introduction, the MC did make this announcement or a clarification that we are in fact facing disruption in banking. Not only disruption is taking place in banking, but you'll find that the whole world is under some kind of a disruption. Whether you talk about the planet itself from a climatic point of view, you have tremendous disruptions, unheard, unseen, and unknown until very recently. The social side, you need not have to mention. There are disasters and also perspectives that beginning to see from different points of view, disrupting the cohesiveness and the harmony of the people who have worked for a long time. And on the economic front, I need not have to, because I think some of the panel members are having tremendous expertise on these areas. And therefore, you'll find that when we talk about the digital era or the digital age, you have technology overtaking all these events, whether they are from the social point, whether they are in the economic front, whether they are in the political front, or even in spilling over into banking and other industries. Without going much into the area of Industrial Revolution 4, sometimes you'll find that the word revolution is very revolutionary. We do not want to have any revolutions, but it so happens that it captures the essence of what is happening in the world. Technology tends to disrupt. Therefore, there are three perspectives which the panelists, I would expect them to look at this, is that banking, as we know, as an intermediary between savers and investors, whether this classical perception and reality is moving in different directions. If so, the disruption is coming from which side, and what are the consequences for the continuance of the banking industry itself? That's number one. Number two is banks. Are they prepared for this onslaught? Are they proactive, or they are just recipient of this technology and see what is the best outcome that could be done at any point in time? The third is actually integration is taking place in almost everything. When this integration is taking place, what would the banks do when other players, non-banking players, come in to have a bite in the banking and finance services? If so, what sort of a protective measures the banks will have to take, and what sort of a dangers are there for the consumers to take on this perspective? These are the three key challenges I think we are going to face, and it is not going to face in a very orderly manner, but you'll find that this is going to take place in a much more, I won't use the word disastrous, but because the summit itself is based on this revolutionary concept, we must be prepared for a revolution. Not like the Arab Rising or something like that, Arab Spring. And with that, the order in which we are going to do this is to look at first the speaker, Shan Saeed, Chief Economics of IQ Global Malaysia. He will sort of paint, I won't say he will going to paint the town red, he will paint the perspective from an overall perspective. And then the second speaker is Dato Vaseehar Hassan, Abdul Razack, whom I know very well. And when we came in to this venue, and he was asking me, why are we museum pieces in banking asked to make a commentary in this very important summit? I just mentioned to him, sometimes the historical perspective becomes very important, and just to remind people that we do exist, whether in the banking industry or reality in the world. Now, after Vaseehar has spoken, Dato Ong Eng Bing would be able to look at it. Currently, he is the Chief Executive Officer of OCBC Bank Malaysia. Solid as a rock, is it? As a mountain or as a rock. He will look at currently what is the banking industry looking at this revolution, this disruption, and also the absorption of the technology, and where will this lead to. And fourthly, we will be able to look at Professor Dato Azmi Omar, President and CEO of International Center for Education Islamic Finance, INCEIF, and he will look at it, Islamic banking, whether Islamic banking is ready to take on the challenges in the Industrial Revolution, and whether it is able to provide a sort of a platform, and whether this platform is different from the general banking or it has got its own specialities to look at. And I'm very glad to see finally we have Dato Badlisyah Abdul Ghani, whom I know quite well when he was the chief of Islamic banking in CIMB, now President and Chartered Institute of Islamic Finance Professionals. He will share further perspectives of what Dr. Azmi Omar will say from the Islamic perspective and the relevance of technology in playing the development of Islamic finance. With that, now I would invite Mr. Shan Saeed, Chief Economist of IQI Global Malaysia. Shan?
Thank you, Honorable Dato Seri Iqbal. Ladies and gentlemen, good morning and Assalamu alaikum to everyone. Glad to be here. Thank you, Tan Seri Michael Yo, for inviting me for the second time this year. I will be talking about the challenges and the opportunities the banking sector have in these turbulent times. I won't paint the picture red, as Dato Seri Iqbal said, but we are not living in normal times. One of my articles that was published last month in Money Compass, I wrote that systematic risk, market risk, undiversifiable risk is getting deeper into the market. And when we talk about systematic risk, we are talking about trade war. We are talking about Brexit. Nobody thought that these events would happen. And most of those sophisticated and sagacious investors were taken off guard. And many countries are actually slowing down. If you pick up Economist magazine, November issue, some of the economies that are suffering are Singapore, South Korea, and Japan. And the countries that are thriving with this trade war are Vietnam, Malaysia, Thailand, India. So there's a trade-off. But systematic risk will continue to go deeper and deeper into the market. The second risk that banks are facing nowadays is the geopolitical risk. It can come in different forms. Right now, the biggest geopolitical risk is the oil market. Last year, nobody thought that oil market will be trading at $55. On 2nd October, oil was trading at $86 per barrel, and people were talking about $100 per barrel. And today is an important day because US will be wavering off, the limit they have given to 4 countries. So sanctions will be in place against Iran. And imagine, right now the oil is $72. If the sanctions takes place, we can easily see $15 to $20 premium. So we are talking about $90 per barrel. And that's massive. If it touches $100 per barrel, the global economy will go into deflationary recession. That is even worse than inflation. So, God forbid, it doesn't happen, but the way things are shaping up, US is all set to impose sanction. And look at the other side of the coin. If you put sanctions against Iran, Iran can choke off Strait of Hormuz. There are 124 straits in this world. Out of 124, 3 are important. One is Strait of Malacca, Strait of Hormuz, and Bab al-Mandab, which runs close to Djibouti. 40% of the global oil supplies are passing through Strait of Hormuz, which is close to Iran, and Strait of Malacca. So geography has become very, very important. So understanding geography, in order to make economic and financial sense to that geopolitical risk has got huge implication. So bankers nowadays, they are learning geography and, they are learning political risk and how to cope with that. The third risk is the sovereign currency risk, the government risk. Modern day, 30th June 2015, what happened? The Greece government said, if you have got $100, $60 are ours, and you are left with $40. So the governments, central banks like Fed, ECB, Bank of Japan, they are posing huge risk, especially in the advanced economies. Fourth risk that I see is the regulatory and the human risk. I have seen financial markets going down very closely with my eyes. 18th March 2008, Bear Stearns went down, I was in Chicago. 15th September 2008, Monday, Lehman Brothers went down, I was in Chicago. So when people talk about the US economy is growing, yes, it's growing, but it's not growing as fast as people thought. Banks have paid $357 billion from 2008 as of today in terms of regulatory fines. Penalties. Standard Chartered just paid $1 billion on, if you pick up Financial Times, 10th April. UBS paid $4.2 billion on 20th February to French regulators. And there are countless number of banks who are paying that. These are some of the challenges that are growing and they will continue to grow. But what are the opportunities? Opportunities are immense. When we talk about disruption, technology, AI, so it's up to you whether you want to adopt it or you want to be left behind. If you see, technology is actually spurring growth for many countries. China is now the number one leader in AI. Huawei, leader in 5G. By 2025, 1.2 billion users will be using 5G and 1/3 will be coming from China. So we are talking about 400 million users from China alone. The other sector that is very close to my heart, I have been following commodities market for the last 20 years, is the energy sector. Last night, I did not sleep the whole night because I was following the market. I was listening to Fed chairman. I was looking at the oil market. Saudi Arabia, this is the first time would people actually share with you. Saudi Arabia is investing $300 billion in petro yuan. And that is massive. And they will take up to $2 trillion by 2030. I was talking about Chinese yuan in January 2011 in New York. And the only person who believed my insight was my Nobel laureate professor who flew down from Chicago to New York just to listen to me. And they were around 150, 200 American investors. They thought Shan is crazy. Shan is mentally retarded. My father passed away. The lady came up to me and she said, "Are you in depression because your father passed away?" I said, No, I'm absolutely fine. Fast forward, November 2014, I wrote in one of the local magazines called Smart Investor that petro yuan is coming in the market. Last year, 26 March, petro yuan started. So petro yuan will be giving tough time to petro dollar. And that is where the banks can come in and they can work very closely with energy companies. LNG is becoming big in this part of the world. There will be a price pressure in LNG market in the next 2 to 3 years. You have major players like Malaysia, Qatar, Russia, Australia, Papua New Guinea, Indonesia. Exporters. And then on the other side, you have importers like Japan, China, South Korea, Thailand, Pakistan. So the game is on. The third thing that provides huge opportunity is the infrastructure. If you were invited in Belt and Road in the second summit, you were relevant. If you were not invited, thank you very much. You can have your ice cream and you can go back home. 37 head of states, 60 ministers, 5,000 delegates, the Western media did not cover. The whole world is looking to one person and his name is President Xi Jinping. The whole world is looking to one consumer, China. $2.3 trillion of wealth the Chinese consumers are holding. And all the Western banks and the local banks are vying for that $2.3 trillion. So I think there are a lot of opportunities is how you look at it, how you look at the market. And I see a lot of opportunities. Yes, there are risks, and the risks will continue to remain. It's how you strategically and tactically place yourself. The Western banks are retreating from this market because of compliance risk. I see two major banks, Maybank and RHP, moving very aggressively in the market because I know the leadership. I know Farid and Rafiq Marikan from Maybank because we often meet in the same business school alumni club. They went to Harvard, I went to Chicago. So I think the leadership has got a lot to do with these banks. So I think Maybank and RHP are poised to take market share, and I would not be surprised that the market cap touches $35 to $40 billion in the next 2 to 3 years. Thank you.
Okay, you have done the global perspective within the time limit that is given. Therefore, the bell did not disrupt you. Now, Shan's presentation basically looks at the systematic risk, the market risk, and the business risk that are associated in the banking and finance industry. And he also sees this, the geopolitical play in terms of the economic benefits that it can bring forward to the global scene. More importantly, he looks at the technology-induced risks. I think this is the essence of the panel discussion that is going to be. Technology is by its own design and action is moving in one direction, and therefore the technology influences every industry, including the banking and finance industry, if that is what is going to happen. We look at it from the point of view of historical perspective. Dato Vaseehar Hassan was in the banking industry, and RHB is mentioned. He was the chairman of the RHB Bank and led the forming of the RHB Islamic Bank. And perhaps you can give us the perspective of how technology in its own development influenced banking at that particular time, and later we will look at where it is heading. Over to you, Dato.
Thank you, Dato Seri Iqbal. I have transitioned from banking to clinical psychology and leadership development. And some of you may have observed among the panelists here, if you look at the 6 of us here, 3 are still wearing ties with the suits. These are the people who are still very traditional. 2 of us have done away with the ties, but still we wear the jacket. So we are somewhat willing to change, transition. But the youngest in the group, Badlisyah, Dato Badlisyah, had the guts to come with the T-shirt, and that is the disruption that we are all going to take place in the industries. And it is people like that and companies who reflect that kind of strategy will be the survivors. You see, you may have heard of a very famous brand, Hermes. You know, because of the Birkin bags and all that, it's been very popular in Malaysia. If you look at the history of Hermes, which was traditionally a supplier of saddles and bridles for the coach industry. Those days, horse carriages were the only means of transportation, and therefore they were suppliers of leather goods to the coaches. But today, they have still survived. Even though the industry has disappeared, the company has survived because of its willingness to change with time and look for the opportunities. So industries like banking may disappear, we don't know, but the banks themselves who have a strategy like Hermes may be able to survive that onslaught of the industry. As we all know, the disruption is very, very severe in many industries. I mean, taxi industry, for example, Uber and Grab, and then Airbnb, etc. And even in the airlines, the budget airlines have disrupted a lot of the businesses, the traditional businesses. So how much we are willing to adapt and change and accept the new technology will decide the future of our respective organizations. Industries may disappear, but your organization will still survive because you are willing to adapt and get in the new technologies. So I think that is going to be a very important aspect for the future. But this is just an observation for me, but my original thing, I thought I should talk about the history of banking, because many of you are either directly working in banks or providing services to the banking industry. But I'm not so sure how many of you know the history of banking and how banks have evolved over the years or centuries. And I would like to give a brief background of how banks have evolved and survived until today, but there is no guarantee that this survival will last in the future, and that will very much depend on how the individual institutions are willing to embrace change. The origin of the word bank comes from the Italian word bench. Bankers used to sit on a bench in Lombardy, in Italy those days, and they did their transaction of banking. And when the bankers failed, the bench was broken by the angry clients of the bankers. And that is the origin of the word bankrupt comes from that, because the bench was broken. And this is how the banking started in a bank. But of course, there is also some disagreement with that. There are others who say, no, the word bank comes from the German word back, which means it implies joint stock funds. That means the bankers those days were joint stock funds. People put money together, and it's the German word back, which was then Italianized as bank. So these are two views of how banking started. And of course, Jews in Lombardy were the people who were mainly involved in banking at that time. And then, whatever you believe, banking can be traced to Europe in the Middle Ages. That was when the banking started, in the Middle Ages in Europe. But there is also evidence in history to say that in 2000 BC, Babylon had banking, but it was primarily through the churches. Through the temples. Churches were not there then. Temples, like the Delphi temple and all that, they were the powerful bankers who were controlling the economy at that time. But when religion sort of disappeared for a while, until the birth of the new religions like Christianity and Islam, the banking also somewhat took a back seat. And then the emergence of banking came back in the Middle Ages when the European banks were set up. And then they played a very critical role during the Industrial Revolution. Now we are in what we call IR4, but IR1 was completely supported by the banking industry for the growth of the countries. And many of the industrial banks, Germany played a very key role in having industrial banks to support the growth of the industries. And later, many other countries followed that. Specifically, if you can look at Japanese banking, they were also very supportive of the industry through long-term banks and supporting the industries. Having developed over the last 200-300 years, today banks are in a very, I would say, in a crossroad of their survival. An example, In the UK in 1981, there were 15,600 bank branches, 1981. 2018, in the UK, there are only 4,800 bank branches. So you can see how branches are disappearing. Similarly, in Malaysia, we all used to boast which bank had the maximum number of branches. Of course, Maybank was the leader. It had 400 over branches in the country. Today, if you look at the number of branches Maybank has, it's below 400. Similarly, CIMB and RHB, the big banks, they have reduced the number of branches. What does that mean? That means the people who are no longer going to the branches. If you observe anybody going to the branch, it is usually people who are above 40 years or so. If you observe in the branches, you never see people who are in their 20s or in the early 20s or anything between below 20 or 30. Nobody goes to the banks. And you do not have to have a bank account in the US or in many countries to conduct your transaction. Soon Malaysia will become also like that. You need not have to have a bank account, because a lot of new things are coming where you can survive without a bank account. Online transactions you can use, and a lot of competition also is coming from retailers, people like the retail supermarkets and the departmental stores can play a role in banking. Touch and go is aggressively moving into the business where you can use the touch and go card for a lot of the transactions. And therefore, these are some of the threats that are coming to the industry, and how we are prepared depends on the individual institutions. The industries may or may not survive, but the key word is look at your own strategy, how to survive. And among the Asian or ASEAN institutions, I'm not so sure about OCBC, but I know very well that DBS is the bank that has really gone in very aggressively into the digital banking and other areas, and a big chunk of their revenue is beginning to come from those industries. So with that, I would say that pay attention to the strategy. Whether the industry disappears or not, don't be worried, but look at your own survival, how you can survive. So if you do that strategy, you can be the Hermes of the banking industry for the future. Thank you.
Thank you. Thank you, Dato. Thank you for giving us a historical perspective. Two things emerge from Dato Vaseehar's presentation. One, you look at how banking originated. There was a necessity, and somebody is willing to come forward to fulfill that necessity or the demand. So banking started and institutionalized, and it has gone into from strength to strength and so on. In the Malaysian context, I think the similar feature was pervasive. And the second point I think he made is that with technology now coming in, I remember in the 70s and 80s when ATMs were just being implemented by banks. If you want to implement one ATM machine, you are treated as a branch of the bank. So regulator plays a very important role in order to understand how technology is advancing. Then you find ATMs are all over the place in supermarkets and in the other places, not necessarily meaning to be a bank. And now you will find that with this sort of touch and go and cashless payments about which he mentioned, that every instrument that you carry, whether it is the mobile phone or the tablet or anything like that, can actually perform the transaction that you're looking for, and you need not to have access to a bank branch in order to get that money and deal with it. And those of us who have been to China, you can even pay for your kuitiao using your e-pay systems and so on. No cash is transacted. Now, the other important thing is that whether it was in Italy, even in Malaysia, you had these sort of features. I think those of you who know Lebo Ampang, in Lebo Ampang, there used to be the people known as Chettiars. They were the traditional bankers to the Indian community. And you didn't go to the bank in order to get your money, and these people lend that money to the Indian businessmen and sometimes to the other. And then traditionally you will find that in the Malay society, you will find some of the Sikhs the Sikh people, the Punjabis, used to lend money. That were the transaction almost performing. So historically also we had that kind of a disruption because banking has not become pervasive. And banking was based on a trust. I do not know anybody knows the word comprado. Anybody who knows the word comprado? Yes. I think those people will know. If you want to borrow money from a bank, you will have to first get a comprado to be your partner or a sort of an agent. Because the bank relied on the comprado, the representative of the community and the people. So all these are classical features, but today with internet and technology in an advanced kind of a perspective, your history is all written in your profile. So no problem how to trace your records and so on. So now we move on to Dato Ong, and he will probably look at the OCBC and OCBC related enterprises, how they are dealing with this disruption in technology and what is the future it holds. Dato Ong?
Thank you, Dato Seri. I won't talk just about OCBC, but banking in general. Good morning, everyone. And I think I can say that I'm someone who is also in the second half of the generation. But I'm a little bit more positive about digital disruption and how the banks will survive. If you look at, I remember attending a summit here about 2 years ago by somebody, and the previous governor mentioned about digital disruption. I think he mentioned that 40% of banking revenues could be affected. And of course, he was making this projection on a trend. That means it's not immediate, but maybe 5 years down the road. There's also a recent study by a top consultancy firm. And they actually pointed out that only 36% of people that they interviewed, if given a choice to deal with just only a digital bank, will shift their wallet to these banks. So it gives you some comfort, especially I see a lot of young people. I think some of you may be bankers. Maybe the older people may still have people, your children, planning to join a bank, and do not discourage them from joining the bank because it's not a dinosaur industry. Dato Vaseehar actually mentioned that banking has been around for ages, and we've been survivors. If you look at about almost 20 years ago, before Malaysian banks were affected by the Asian financial crisis, guess what? Most of us were lending to the corporations, the SMEs. We did not lend to the consumer. But 20 years later, you can see that the banks, the balance sheet are actually very, very robust and very balanced. Most banks have revenues coming from corporate, treasury, and commercial and consumer. In fact, a study shows that most of the retail banks and the local banks actually have most of their revenues coming from retail. Now, this presents opportunities as well as a threat. Clearly, we are at the mobile age. Dato mentioned that people don't go to the branch anymore. That's very true. But guess what? They will not go to the branch for simple payment transactions. Like myself, I do a lot of transfers and all that without going to the branch. But when you want to do something very important, or when you have a problem, that's where you will want to see the bank. And I think bank will be here because banking, whatever you say, is still a very people business. When you have substantial amounts to invest, I don't think you'll be so comfortable with just trusting them with some new fintech or whatsoever that comes into the market. So banks have to use this advantage, i.e. the trust and the regulation that helps them to be strong, to make sure that they can adjust to the environment of digital. I would say that many things that we talk about digital these days is something that the banks have already invested a long time ago. Dato Sri mentioned about ATM. ATM was one of the things that we started a long time ago to manage the crowd at the branches. And today we have a very happy problem, but it's also a problem because guess what? We have very nice premises, but hardly anybody goes to sit down there. People will go and take money and deposit check without going to the teller. So we have branches that are very nice, not just in OCBC, but many other banks, and yet they are all empty. Now, the second thing is that I think this is a new trend. It's happening in Europe. It's not reached the shores of Malaysia yet, but it's about open banking. I would say that it's a little bit overblown if you think that consumer, in the sense that they want best deal in the market, will open all their information and make it available to anybody. Because when you give consent such that your information is available to other banks, it creates a sense of security. Now, what banks need to do and regulators is to make sure that when you create this openness, you have the protection and the security aspect. The other thing is that banks in Malaysia, we need to work very closely with the regulators. Because if you look at where banks are doing the way they approach the digital business, many of us go to the bank to do a transaction. It is not so exciting. Most of our websites are generally on how you want to make your payment, transfer money. If you compare us to the Amazons of the world or WeChat or Alibaba, they are very activity-based, very lifestyle-based. We need to maybe focus away from product-centric to actually a whole customer journey. And to do that, we need to be able to work with the regulators to actually allow us to be part of an ecosystem of the customer. That means a lifestyle ecosystem. What this means is that, let's say, if we are having a SME portal, we don't want to be just one where you help you to make payments, contract FX, etc., or make payments for payroll. We want you to be able to say, okay, we have this accounting software for you to manage your accounts. If you need to get some assistance on how to improve your sales and solve an operational problem, you can get to these partners of the bank. So we need to be able to actually create an ecosystem to fight with those fintechs who are actually more tech fins, people who have already created a huge mega ecosystem where they can actually then take the position of the bank. Now, having said that, I think if Amazon were to go into banking in a big way, I think the regulations will come in and they will really help to regulate and create a more open field for banks. The other aspect that I wanted to highlight is that we talked a lot about digital, how we need to take on this and improve our costs. Now, if you look forward 50 years, and some of the things are already happening in places very near to Asia, in South Korea. And this is a symptom of not just South Korea, but most of the countries in the world. Increasingly, everybody will acknowledge that South Korea is one of the most technological savvy countries, right? But guess what? The youth, the people who are our future, the unemployment rate is more than 3 times the national average. Why? Because people are working longer. Most countries, very soon, Malaysia, will move from 55 to 60, and eventually we may not even have a retirement age. People can work longer. People are told that you need to work longer because you need to survive. However, when we stay longer, where are the youth coming? And when the youth are not able to get a job, you create a new set of social problems. That's why you have terrorists, because they don't know what they're doing. They are just hanging around. And anybody that can influence them or give them some kind of purpose will be able to get their mind. The other aspect is one of the studies about Malaysian market, that in the next 5 years, the big growth areas are actually on unsecured loan and credit cards. These are the underserved market. Now, if people who actually go for this type of loans are the young people who haven't built their capital yet, if they cannot get a job, or if their job is unstable, i.e. the gig economy, how are people going to manage them? Of course, there are ways we can actually do it with the way we track activity and lifestyle instead of the traditional credit matrix. So let's be very open about the challenges that what we want and what we wish for. But having said that, I think the trend is inevitable. We need to, like Dato Vaseehar says, we need to adjust and change our shirt while we are running. I'm glad to say that most banks actually have taken the step. I was also at one of the conferences about last year, and one of the speakers mentioned that many of the things that you invest today on digital, that is not focused on improving your efficiency, but is to go to a new market and all that. It will not be something that you can monetize today, but it will certainly do a lot for your market capitalization and share price. And that's basically what a lot of people nowadays do, because they need to be able to have a story about the future. And that's very important. But we got to make substance over form. Thank you.
Thank you. Thank you, Dato Ong. There are a few issues that crop up from Dato Ong's presentation. I think certainly the technology application in banks did bring about benefits. I remember when I was serving as the first executive director of the Institute of Bankers, when we set that up in 1979 for the central bank, banks were just introducing ATM machines. And you'll find that many people were closing the accounts. And so the governor directed the institute to do a survey to find out why people are closing accounts. And the survey revealed one basic fact, that is, the people are saying, I want to see a pretty girl as the teller in front of me, not a machine. So you'll find that when technology disrupts, the sensitivity of the banking customer also has to be taken into consideration. But today is the reverse. I think you touched on the millennials, the new kind of people. They don't have much love for paper. They are all in the digital world. And therefore you must be able to interact, whether it is cashless or paperless. And if you are able to provide for that kind of a platform, then you'll find that that bank is going to survive more than other banks which are not able to. two things also come out from your discussion. Banks look at the technology for existing process. There are processes in the bank. They say they want to speed up the processes and also provide efficiency in terms of providing the information to the customer. Therefore, they draw from the technology. But banks are very slow to be proactive. In other words, I'm looking at this technology and therefore I want to transform my banking service to new products, and on that basis you're going into that particular area. In Malaysia, we find very slow into developing. I just want to mention about one thing. You talk about banking, it was commercial banks. In the 60s and the 70s, they were commercial banks. They just dealt with the customer, normal banking services, and trade financing was the mainstay. But you find that the merchant bank licenses were given, and merchant banks came into the area of what is known as the corporate finance. And then suddenly you will find that it is no longer necessary to have this kind of a division between commercial banking and merchant banking. Merger begins to take place for investment banking. And now that is the feature. One bank, all services integrated and provided for. And in this process, we also found one other thing that is coming in. The post office savings bank, which was meant for people in the street, on the street and in the kampungs and the thing easy access, converted itself into another bank. And also building societies, those societies which were giving loans for houses and also transform themselves, and these features begin to take place in the scenario. I think those features were brought out very well. The only thing that is left out in this is this word fintech, financial technology, fintech. I think it is going to talk about cryptocurrency, and sometimes it is also mentioned as kleptocurrency. So this in the digital world, you're going to get into some vulnerability for people, not only for banks, but for customers and others, to what extent this is reliable and how central banks are able to provide protection and also statutory and regulatory framework, we do not know. But now we have got two other speakers, one Dato Dr. Azmi and also Badlisyah. Their perspective is going to be from an Islamic finance and Islamic banking, but you need not have to restrict to only Islamic finance and Islamic banking. Look at the whole picture and how it interacts with the sort of a technology. Over to you, Dato Azmi.
Thank you very much, Datuk Moderator. Fellow panel members, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh, and a good morning to all of you. Let me begin by sharing my thoughts in the context of the current scenario of the digital disruption. If you look at, because of the advent of digital disruption, you can see three major phenomena, particularly in the context of financial services. One is, if you can beat them, you join them. So what happens is you see banks are now offering digital banking services. And it's happening in Malaysia, Singapore, and abroad. That's one perspective that we can see. Second thing we see is that standalone or digital-only banks have been established in a number of countries. But in the case of Islamic banking, so far there's only one digital-only Islamic bank that was established by Al-Barakah in Germany. And it's called INCEIF Bank. Purely 100% Islamic banking services, and you can open an account within 8 minutes. There is no face-to-face interaction, everything done online, digital. Only 8 minutes. They promise within 8 minutes, if you provide the documents, you'll be able to open an account, do the banking transaction, services and so on. The only thing that they have not provided thus far is the credit facilities. But along the way, obviously, they will be providing credit facilities as well. For example, some other digital banks do provide typical savings account, mortgage facilities, business loans, remittances, and so on. So as we can see, we have the second category of digital-only bank. The third category is where the major disruption is coming from, which is digital fintech companies, or the fintech companies providing financial services. The likes of, like my colleague here will be sharing what he is doing. Dato Badlisyah will be sharing what he's doing in the space of Islamic digital financial services. Okay, and we can see that in Africa, for example, the M-Pesa is one of the good example of a digital financial services company, not using smartphone, but using simply text-based mobile communication. Okay, so that's one example. Then if we move next to the area of what we call the potentials or the opportunities available not only for banks but also for digital financial services or fintech companies, what I would like to begin with is to look at a survey done by, I'm not sure some of you are familiar, what we call Global Findex Database. Some of you may be familiar, some of you may not be familiar. Global Findex Database, this is the latest study in 2017, and the report was released in 2018, April 2018. Here, I'm going to talk a bit about the opportunities, okay, for financial services firms, particularly digital financial services firms, to provide services for unbanked individuals. Unbanked individuals. We talk about, typically the middle class or the upper class, where banks are providing that services. But there is a large segment of population which are unbanked. They are not given that kind of services. And for banks to establish, again, a office or a branch in rural areas, it may not be practical because of the cost involved. So one of the ways to solve this problem is to go through the mobile or the digital approach, one of the ways. Let me read some of the interesting findings of Findex, okay? They surveyed more than 150,000 individuals in 144 countries. So 150,000 individuals across 144 countries. This survey was done, okay, to look at how people access and use financial services, how they make payments, how they save, and how they borrow. And they also look at the usage of digital financial services provided by fintech company. Okay? So what are the findings? At least now it has increased. 69% of the global world population has bank account. Okay, bank account here not only banks but also accounts with fintech companies, like the likes of Alibaba, M-Pesa, and so on. So it has increased from 62% to 69%. Estimated number of unbanked population is 1.7 billion worldwide. Okay, 1.7 billion individuals in the world do not have bank or financial services account. Okay, where do they come from? They come from 7 countries: Bangladesh, China, India, Indonesia, Mexico, Nigeria, and Pakistan. If you're looking from OIC countries, 4 of these countries are OIC countries. These are Bangladesh, Indonesia, Nigeria, and Pakistan. Okay, 4 out of the 7 countries have do not have bank accounts. Okay, individuals. And if you contrast again between high-income countries to developing countries, in terms of gender, 50% of the women in the developing countries have bank accounts. Only 50%. For men in developing countries, 60%. But in advanced countries, high-income countries, it's 90% for both male and female. So what we're saying is that, again, there is opportunities in the gender segment. Okay, women do not have bank accounts, which means that for financial services, it could be traditional bank with mobile applications, or it could be fintech companies providing those services. Okay? And then the proportion of individuals who receive and send digital payment increased to 76%. 76%. And these 76% also have bank accounts, which also means that a lot of people who are using digital services have bank accounts. The remaining do not have bank accounts. So again, if you look from a bigger perspective, how do you address this issue? How do you address women into the financial sector? How do you bring more people into the financial sector? Without bringing individuals into the financial sector, that means that they will be left out in the whole scheme of financial services in a particular country. We talk about providing all these services. So how do we address those unbanked individuals? So to me, I think one of the things that we can look at is to provide those solutions through digital services. And this is where fintech companies play a very important role, because you do not need to have branches. You can open an account within 8 minutes, provided, of course, you have the KYC, the AML put into place. I was telling some colleagues here, even in Malaysia, to a certain extent, we already have that kind of facial recognition. We don't need to have technically an IC to do banking transaction or to open an account. I mean, the closest you can see is that when you go to the airport immigration, you put in your passport, then after that you move forward, and there's a facial recognition to say they don't need your thumbprints anymore. Just your face alone would suffice to see that you are who you are, who you claim to be. So which means that even in future, we are talking about identification card may not be necessary. Facial recognition may be the way to move forward in the future, especially if you talk about in the Muslim world, 60 or 70% of the refugees of the world are Muslims. And when they move from one country to the other due to war, they do not carry the IC or the identification card or passport. So having facial recognition would be the way. And this can be done through example of digital companies, digital fintech companies. But let me just also tell you some of the issues faced by this. One of the issues that we discussed earlier on is about, of course, jobs. The other one is, more importantly also, is the issue of what we call financial inclusion. I talked earlier on about financial inclusion, bring more women, bring more people into the financial sector. But we also have, when we have digital disruption, we will also have financial exclusion. What do I mean by financial exclusion? As we advance into artificial intelligence, robo-advisory, when you want to open an account, because of your lack of, for example, record, financial or digital companies may exclude you from the banking services because of your financial behavior. So in the end, there will be people who are excluded because of credit record, because of other things, they may not be able to access financial services. So that is something that a regulator will have to consider. Finally, I would also talk a bit about, although we talk about the digital financial services where we want to have more online-based applications, easy access, but let me cite you one example. I do work in Brunei every month because I advise the central bank there on Islamic finance. Every month I see at the central bank there, they have one office where a lot of people actually go to the bank at the end of the month to get money. The central bank send money to people through banking accounts, meaning they credit the money to the bank accounts, but for certain age individual, social interaction is still very important, which means that although millennials like to do banking online, but for certain age group, it's important for you to meet your friends. So when you go to a bank, it's not just getting money, it's also social interaction. And that's part of the human psychology that must be considered when we talk about digital financial services. Okay? And finally, INCEIF, as some of you might know, was established by Bank Negara Malaysia in 2005 as a university originally for Islamic finance, but now we move into sustainable finance and halal economy. We only offer master's and PhD programs, having about 56% of our students are international students. Okay, we are postgraduate university. So what do we do to address this issue? Because we are a financial institution university. Okay, what we did recently is that, or rather late last year, is that we have introduced action learning, where our students will be involved in solving real problems of financial institutions. So it's no longer a classroom style, where students are given not only interactive, they go to the companies concerned, companies open up their books, of course through NDA and so on, they will analyze the problem and propose solutions to the problem. Because at the end of the day, in future, what kind of individuals you want in your financial sector, in the bank, is that you want to have creative people, innovative people who are able to think and provide solutions, not purely technical coding skills. Of course, you need individuals with strong coding skills to provide technical solutions, but more importantly, you need people to have strong leadership, more innovation, more creative in providing solutions to the problem. So we are focusing on that. Secondly, what we are also doing is that we are establishing innovation lab, because already our students have established digital companies. One of them is based in Dubai, what we call Finocracy, Dubai-based digital company, and more are being set up by our students. So we are creating innovation lab in our campus and having mentors, accelerator programs, and so on. We organize Innovest competition as well this coming August. And of course, as a university, we change our curriculum to include data analytics, data science, innovation, entrepreneurship, and so on. But more importantly, as we said, being a university, we have to address human capital. And human capital is one of the key components. We talk about, yes, we need to have regulation, balance between innovation and prudential. We need to have that. But at the same time, we also need to have the right human capital. So our role as a university is to provide that human capital. Again, thank you very much, Mr. Chairman.
Thank you. Thank you, Dato. His presentation brought up two very critical issues. This is how pervasive banking can be when you look at the human population. This is the inclusive banking. And in Malaysia and in the rest of the world, you'll find that this is the trend in which people are trying to make, the institutions are trying to make, the banks are trying to make the people become bankable. You have given very good examples of countries where this inclusion is not very pervasive yet. But I remember of one country, India, although 1.3 billion people, they have embarked on this mission of having this identity card called the Aadhaar card. Every person who holds that Aadhaar card, like our identity card, is also able to open a bank account. Not only for their normal banking activities, but the social aspects, the social dimensions of economic development focus on this bank account. Targeted subsidies and benefits that are given, like our Bantuan Sarang Hidup and other petrol subsidies and so on. It doesn't go through intermediaries and they have pilferages, so you can be targeted on. Even in Malaysia, we find that people are queuing up to pay money. They have to take the money from the bank and they are queuing up. And one is the public utilities. The public utilities, people still go and pay the electric bill, the telephone bill, and the water bills and so on. So it is still not digitalized. There is a lot of opportunities available for banks. Whereas in other parts of the world, it is all online. The payments are online, the accounts are readily available. And we'll find that even the government services, they don't even accept checks. You have to pay bank drafts. So we are still in the archaic area. So some of these features, I think, comes into the financial inclusion and also educating the institutions to be able to readily applicable for this digital age. So that brings us finally, and we are now within a good time, to Dato Badlisyah. to talk about your area, whether it is Islamic finance and banking or broadly into the general area. Please.
Thank you. Assalamualaikum warahmatullahi wabarakatuh, and a very good morning to everyone. First of all, I apologize for being a little bit tardy this morning. I came in a bit late.
I thought that was being complimented for.
Let me touch on the subject by saying this one simple statement. Banks or financial institutions are not being disrupted by technology. It is being disrupted by trust issue. All right? Because technology has been there for aeons. All right? Technology has been there. Okay, different technology at different times, right? It advances across times. But technology has been there. Right? Some of the technology that we are doing or employing today has been in the market for the last 60, 70 years. Only now we are trying to use it. Right? We are only trying to use it today because the industry begin to feel somebody is encroaching into the space using some of this technology. But sometimes we can't really identify what's the problem, what is threatening us. Right? We see technology as the one that is threatening us, but in fact it's actually a trust issue. See, banking started because there was a need to intermediate between person A and person B because person A doesn't know person B. All right? The bank has information on both person A and person B. All right? So banks are trusted because they have information. All right? So it is this capacity that banks have that allows people to trust them better than each other. Right? Because before banks started doing their business, everyone is lending and borrowing from each other. Whether they are friends, whether they are family members, whether they are total strangers, right? Whether they are business acquaintance, right? They were dealing with each other. They don't need anyone to intermediate between them. Right? Because they live in a small society and they know everyone. Everyone knows everyone. Right? There's no lack of trust because information is available at their fingertip. They know who their father is, who know their mother. If they know the wives, right? If you don't pay, I go after the wife, right? And the wife will lecture you every day. Right? So that is the kind of society that we had in the past. Then society grew. Right? People start losing touch with each other and therefore they do not know each other anymore. They need someone to help. Tell them that if I lend money to this person, it will be a good thing to do, that I will get back my money. Or I need someone that I trust that if I give my money for safekeeping, the money will continue to be safe. Right? So there comes the bank, the intermediate, the society. Right? As time continues, the advent of technology facilitate and enhance society to know each other better. Right? That's basically what is happening. Technology is simply enabling society to get to know each other better again. Right? We are more connected. We now have what we call big data and the likes. Companies now have huge data about their customers. Right? They don't need banks to tell them whether their customer is good or not. Right? The likes of PayPal and Alibaba and eBay and whatever not knows exactly what their customer and their client is spending, where they put their money, which bank they put their money. In fact, they can even estimate how much each of their customers have in each bank. because the money flows through their system. Right? So, this ability of knowing people through technology is giving the banks a run for their money. Right? That's basically it. Right? People no longer need banks to help them trust someone. Right? That's basically it. Nothing more, nothing less. So we need to identify the real issue so that then we can manage the challenges, right? And really reap the opportunities. So if we take a step back and really understand the real disruption is trust, and trust comes about because there is information, then the bank needs to come up with the strategy on how to make sure that they have access to the same information that Alibaba has, for example. Right? The same information that eBay has, or PayPal, or Alipay, or Amazon, Lazada, and whatever not. Can banks have access to those information? And that is where the word collaboration and whatever not comes into the picture. Or, to be more drastic, banks can decide to transform itself into a platform instead of a bank. Become an Amazon. Right? Become Alibaba. Because only when you become a platform where everyone do business on your platform, you will not get the information that those people have today. Right? And for as long as you do not have that information, you will be disintermediated by society. Previously, society asked banks to come into the picture to intermediate them. Today, society is telling us, I don't really need you anymore. Not so much lah. I still need you, right? Because there are certain things that the banks provide that others do not provide, right? But the likes of lending, for example, they don't really need banks anymore, right? Because Alibaba lends to all their merchants based on the cash flow that goes through their platform. And banks cannot finance those things because banks do not have those information. So those are important, and this is the biggest challenge. Right? When we talk about challenges and opportunities in the digital era, the biggest challenge is not the technology, is that the bank cannot compete in getting society's trust. Right? So banks need to figure out how to win that, not the other way around. Right? So if we identify the real issue is not technology, but trust, we will behave slightly differently. Today, a lot of financial institutions are embracing technology, going everywhere. Let's get technology for the sake of it, right? And then they introduce some new services based on technology, do a big hoo-ha press statement, press conference, and whatever not, and then 3 months later, the business collapse. Right? Because they are doing it for the sake of doing it, and not really understanding what's the issue. Right? And it is happening. Right? Some banks are wasting money. Right? And then you talk about embracing digital. See, being a digital bank and being a brick and mortar bank, you are still a bank. Right? We must always remember that. We are still a regulated entity that is governed by the financial governance imposed by the financial regulator, where there are things that we can do and there are things that we cannot do. All right? So in essence, you can embrace digital as much as you want, but you remain a bank. So what Professor Azmi mentioned just now, the underbanked and the underserved population will never be served, right? Because probably under the regulation, you can't touch them anyway, right? So for banks to move forward into the new era, right, there must be a total re-engineering of how you provide services and products. It cannot just be, let's become a digital bank, right? So I think I will stop there, and then we can have more discussion.
Thank you, Dato. Thank you, Dato Badlisyah. We are 10 minutes away from the scheduled time to close this, and if I don't give an opportunity, then my scoring as a moderator would be very low. So quickly get on to make a comment or a question. Identify yourself, who you are, and which bank or which institution you are coming from. And then if you are addressing it specifically to any one of the panel members, you are welcome to do. If it is a general question, then we will ask anybody to comment on it. So any takers? Yes, please.
Yeah, can we proceed directly to the microphone and introduce yourself?
The microphone is there. Yes, please. Hamid, is it? The microphone is there on the aisle. Standing mic.
Thank you. My name is Ali Akbar. I'm from a technology company. I have a question for Dato Ong. So you talked about the shift in terms of product-centric towards the lifestyle, and you quoted a few examples in terms of the likes of Amazon and whatnot. My question is that what are the challenges you see, and what are some of the roadblocks in terms of making the transition for the banks, and how do you think those challenges should be addressed? Thank you.
Thank you very much for the question. I got to be careful because I'm a regulated entity. Obviously, what banks have always been very good at, i.e. customer information, confidential information, compartmentalizing it, making sure that it's secure and all that, are the challenges that now we face because most bank systems are catered in this way. Within the bank itself, most banks limit the access of information within their own confines, even within the department. And that doesn't allow a lot of sharing. So when we want to go to that journey of trying to make sure that we can see the whole picture, it becomes quite difficult. Of course, we know that it's something that customers would want to do, and we can actually do a lot of potential growth in business if we know all the journeys of the customer. But there are certain limitations that prevent us. So I think we have to have some discussions on how this becomes more available. And just now I mentioned also about open banking. Open banking is really good from the perspective of the consumer. The utopia is that customer can basically say, hey, here I am. Can you give me the best interest rates, the best wealth products, the best mortgage rates and all that? But in reality, I think people are also very concerned about their information. So I don't think that even if we make it available, it still needs the customer to say, yes, I don't mind making my information available to all the banks in the industry. Because we never talked about cybersecurity. Because even the strongest countries have been easily penetrated. And guess what? They are not penetrated by people in the same country. You could be hacked by somebody in Ukraine, and you don't have any knowledge of how to get these guys. So I think that availability of information is another thing that sometimes makes us a bit worried. As a bank, Badlisyah mentioned about trust. The worst thing we want to do is to have a system breakdown. And we have to stand in front of the media and bow our heads and say, okay, 100,000 of our customers' information just became available in somewhere. I think that's something that we got to balance, and I think that's why, to a certain extent, we don't blame the regulators for being sometimes a bit careful. I won't use the word slow, but being careful about what we can do in the fintech world. Because banks, like Badlisyah says, we are still banks, no matter how digital we want to be. In fact, we are talking to some people that are very much into the digital banking thing. And they realize that being a digital bank alone may not get them that far, because they need to have the trust of somebody behind them. And in fact, they are talking about being a digital shop window, but behind it, let's say if you want to access them, it's an OCBC, it's a Maybank. For a deposit, it's a Maybank. For it's a loan, it is somebody else. A credit card is a different thing. Because they also realize that ultimately, consumers are also concerned about the trust, their information. They are very comfortable with actually making payments across. Now, the one that we really hope we could do, and in Singapore, regulators have been quite fast to open up. They have allowed banking to have perhaps 10% of their business coming from non-banking areas, such as e-commerce, where we can tie up with a tour group, a lifestyle group, or something like that, so we can have a win-win. So we can also access that information, they can also access some of information for a win-win for the customer. Ultimately, it's about benefiting the customer. Thank you.
All right, we still have, yes, please. Would you mind? And then I recognize one lady. Not after this gentleman, the lady.
I'm Michael Gay from the property valuation industry. Today's topic is towards banking 4.0. I'd like to ask, I read with interest verbal 24/7 robo mortgage advisors from Singapore. I'd like to ask the practicing banker in the panel that would we see a rise or introduction of mortgage robo advisors in Malaysia?
Probably you'll have to give the answer.
No.
Yeah. Anybody?
Okay.
Yeah.
OCBC actually launched our so-called lady who is not a lady, and she's been very good. In fact, she could even generate sales. But it's still a fraction of what we generate in total through all the people, the men and women on the streets. So I think it's getting there. Since you're from the valuation area, there's definitely a lot of things that valuers can leverage on technology to make this mortgage business and developer more transparent, because we talked about transparency in property values, etc., and how we can get information fast. I think this is where it's a big industry. Mortgage business is the growth area of the banking industry for the last 5 years, at least. Okay, and there's so many things that can be improved in terms of efficiency, valuation reports, database, and all that, where we still require the traditional valuer to go and visit the property. But now we have Google, where you can actually look at the property without having to visit it and stuff like that. So there are a lot of things happening, and I hope the industry could actually improve it. And with the blockchain, valuation reports could also be done this way. Yeah, a lot of potential.
Okay, we are closer to closing time. Yes.
Thank you. I'm from the Department of Business and Accountancy, University of Malaya. Now, I like the comment by Dato Badlisyah just now on trust, right? Because it is true, the big issue here is the trust, right? So now one way to solve this trust issue, the bench maybe should move more towards an equity-based banking system rather than debt trust-based banking system, because as you know, a bank, if they are 100% equity-based, so it will be safer and less prone to crisis. So can I have that view on the, from all the panels? And then my second question is that, in actual fact, the view among the academicians worldwide is that the banks will eventually disappear. With the emergence of all these fintech, it's also because of this trust issue here. So, so what your comments on that? Where eventually we don't need banks. The reasons for banks before, no longer hold. So that's my two comments. And maybe I should add another third comment is that.
Can we just restrict to your two comments first? Yeah. I think the first question you answer. The second one, whether the banks will disappear or not, we will leave it to Kingsley to organize another summit for it.
Can I? No, banks should not do equity. Right? That is the simple answer to the question. The financial market comprises of various components. There is the debt component, there is the equity component, and there are many other things. Right? The industry needs both because the society needs both. It's as simple as that. Whether or not banks will disappear, right? That's the term. Even to say the word, I cannot say. Right? Banks will not disappear. Banks has always been there and will continue to be around. Whether they are big or small depends on how society engage with them and how they get interest for society to do business with them. It's as simple as that. At one point during the Ottoman Empire, the biggest empire in the world, right? Banks still exist, but they were small because society doesn't need to borrow. Because there was no one that needs to borrow. Right? But they still act as an institution that receive deposits. Right? They still act as an institution that advise on financial matters. Right? So, banks and financial institutions will continue to exist as they are, but whether they are big or small, is the question, demand and supply.
Thank you. I wish I would be able to give opportunities for more people, but we have a formal ceremony immediately after this, after your coffee break. So we are on the dot. With that, I'll cross this over to the MC. But before that, I would like to thank Dato Hassan, Dato Ong, Dato Azmi, and Dato Badlisyah and Shan for making your time to be with us and also participating in the panel discussion. And thank you very much.